that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
GM, everyone. Welcome back to another episode of More Than Speculation. We have Anna. Like every single time that I see you on a pod, I feel like you have the most bright and colorful, combo of hair and clothes. So anyway, I just want to start with that. We can jump into the rapid fire questions.
Yeah. Okay. There we go.
Oh shit! All right. So I'm not the only weird one this time. All right, let's go. No offense. No offense. What do you think is the biggest use? What is the one biggest use case of stablecoin?
Access to freedom of value movement, aka access to money.
Okay. Are we gonna have another UST stablecoin, a UST-like stablecoin depeg?
Oh yeah.
2003, 2005, 2006.
You mean
25, 26.
Just derping at the start of the conversation.
I think hopefully not this year. I'm mostly concerned about certain types of RWA backing, and yeah, I think algo ones are also interesting.
Okay. Should every chain have its own stablecoin?
No, but every chain should have a stablecoin strategy.
What do you think is the edge of your protocol as a stablecoin?
Good question. We are focused on distribution, both from the issuer end and from the user end, and we're focused on one ecosystem instead of many, many ecosystems.
What will be the final form of your protocol?
A suite of financial services focused on stablecoins.
Okay.
Nice.
Again, that was fairly short because sometimes we have guests who just ramble on, but anyway, I want to take a step back. Just a quick intro for our listener. What is Perena? Making sure I pronounce it correct because I always said Perena and then you correct me on Twitter. It's Perena. So okay, what is Perena and what's your story?
So Perena is building stablecoin. We call it stablecoin infra, but really it's stablecoin products, starting and focusing on Solana. So what that means is if you think of modern financial institutions like a bank, they have many, many different types of business lines. We think of DeFi, or I think of DeFi, the future of DeFi, as a lot of these protocols will become not necessarily full service, but multi-service financial institutions. We happen to be very much focused on stablecoins. What that means is the exchange and movement of stablecoins, the issuance, facilitating issuance of stablecoins, allowing people to invest and use stablecoins. So concretely, we start with the swapping of stablecoins and enable what in normal terms would be called kind of crowdsourcing of liquidity. Because if you think about how a bank works, a bank is they offer FX services, which is very similar to how stablecoin exchanges are. Stablecoins are kind of FX, even though they're just single currency but multi-issuer FX. So at a bank, you would go to the bank and you would try to exchange money dollar for pounds, and the bank has liquidity. And where does that liquidity come from? Oh, some of it came from their user deposits, and their users probably don't even know that they're using this money to do the exchange. For us, it's a more transparent way of saying okay, users know exactly what they're getting into when they deposit their money to USD Star. They're getting a basket of USDC, USDT, PyUSD, which over time we might add other compliant stablecoins and adjust the ratio of that. But they know exactly what they're getting into, and they can see the transactions that are happening that we as the FX kiosk facilitate the exchange of stablecoin A to B to C, and then in the growth pools you have the rest of the stablecoins. So yeah, in a sense it's I think of it as 21st century banking, but obviously we're not a bank. We're very much an on-chain piece of code that executes transparently.
Nice. Got it. Let me share my screen real quick for everyone to have a look as well.
If you're listening
Okay.
on Spotify, jump to YouTube. More than speculation.
Yeah. So I actually use your protocol quite a bit. Well, I farm the points. But I'm not going to
He's very
pretend.
honest about it.
I'm very honest about it. But I mean, I'm a target audience. So
Yeah.
from my understanding, it's a stable coin backed by different pools of pools with stable curve that allows swapping. Correct.
Hmm.
Uh, so I was wondering, why is the trading volume so low? Is that something that is just for now, or is there something that you want to grow it, or is there like a way to route
Yeah, we
the?
definitely want to grow it. Great question. So the APY needs to be updated, which is something our engineers are working on this week. Since we got hooked up into Jupiter, the indexer, they're like kind of reparsing some of the transactions. But all in all, I would say it's very true. Like APY cannot go up more when Solana has limited stablecoin transaction volume. This is why we're looking into, or we're going to add T-bill based, or cash and I call it cash and cash equivalent, really, based assets into USD Star, because the APY was pretty good when we first launched it. It was like I think 6 to 10% when there was less than $5 million in there, because people were swapping a lot, and that was it went to the LPs. However, as we expect USD Star's TVL to continue to grow, I think users are not going to get that level. It's just strictly speaking, in the current market, our liquidity provision is too early for the market to absorb this volume. But over time, what I hope to see and I believe in is that people are going to use, like, fintechs are going to use stablecoins for payments, for mints, for whatever. And a lot of them have stablecoin swapping needs because they need to accept multiple stablecoins, and they happen to pay out in a different stablecoin. So oftentimes there's recurring flow.
You briefly mentioned. Oh, go ahead, man.
As I'm like an on-chain DeFi guy. Why did you pick Solana out of all these protocols? Or, like, given that I know you were in Solana's, you were like stablecoin lead of Solana before, but like,
Yeah.
Solana has the least diverse stablecoin flow and etc. Right? This product makes a lot of sense if it's on Ethereum or Arbitrum, or maybe even on AVAX, where there's a little bit more real world asset based stablecoin that might have some ARB or something like that. Like, and correct me, right? All the flows of stablecoin would be either from people swapping to in and out to farm different new incentive on stablecoin, or arbitrage volume from various stablecoin, like slightly depegging each other. And it might be because of certain pairs that was incentivized. Let's say on base, there might be their CBBTC and USDC, certain slippage, blah blah blah, that create certain arbitrage volume, right? But
Touch. Okay. Yeah. What was your? Finish?
Sorry, the question was why Solana and Solana, because like Rust language is not the most diverse language to expand as well. Like, just want to learn more on this.
Yeah, I think you bring up quite a few good points. I firmly believe that stablecoin diversification will happen. We're already seeing a little bit of that. I think by the end of the year, we'll see a lot of major financial institutions, or a number of major financial institutions, launch or announce to launch their own stablecoin that are their balance sheet sizes. Yeah. The balance sheet size would be like on the in the magnitudes that would disrupt the current stablecoin market share pie chart. In addition to that, I think, like, yes, Solana right now has, say, 5% of the market share. I think I have a unique advantage in the Solana ecosystem. That's one, but I do think that there's a lot of real payments projects that are choosing Solana. The DeFi space is pretty young still, I still think. For Solana, like the level of sophistication and the level of players, a lot of them are still on ETH, and frankly, most of them are still in TradFi. So like the hope is that some of them will come over to Solana, and those people will drive up both trading volume, asset diversification, demand, and all of those factors. In terms of Rust, yeah, Rust kind of sucks, to be honest, as a building in the ecosystem, because you build so long. Like you go through audits and you like go for such a long period of development time, and then you can only use it on SVMs. So it is a shortcoming for Solana, but it's not because Solana's architecture. It's just that there happens to be more VC chain EVMs. I'm not as excited to go to like a lot of chains, like the spray and pray approach. I'm more excited to work with high performance chains on a deeper level. So I'm definitely interested in going to other chains, including EVM or really any VM chains that I think are promising, have good people building on it. But Solana is our home.
Got it. I was just gonna ask, when we did the rapid fire question, you said that the end goal is a full suite of products, stablecoin powered, and then you also briefly mentioned that you had some concern or like some RWA backing. Just want to know, I guess, if you can tease the audience, what kind of products do you think is like needed, or that you're like working on, and and like what are some of the concerns, I guess, like what type of backing that you think might be problematic?
Yeah. A couple of products that we're working on are underwriting loans in the form of stablecoins, investing via stablecoins. This is pretty broad because in DeFi you can call it yield optimizer, but we think of it as like building an on-chain Charles Schwab or Fidelity, or like it's pretty hard to use those things. As a Gen Z or a millennial, you're most likely in the camp, for US based at least, you're most likely using like Robinhood or some of those more trading focused apps. And then for the rest of the world, if you are not looking to trade, you just want to save, there's not that many like global asset accessible saving and spending apps that also allow you interoperability to go trade. So let's say in Southeast Asia, if you go to, I think Gcash is a pretty big one that allows you to pay, that has savings, has some crypto, but you're kind of tied to that ecosystem. So if you want to move money around, you're in the fiat world. So for people who want to diversify, I hope people diversify between fiat and non-fiat. Maybe they have like a Gcash or mobile pay app, and then they have like Perena, where they invest some dollars across multiple different assets that are not accessible for local country citizens, but they also have some LP in like USD Star, so they can get the money out anytime they want. In terms of what asset classes I am concerned about, I think inherently that nothing is wrong with an asset class. It's about how you package it. So when Athena came out, I got asked a lot of times, like, what do you think about Athena? I think at first I was overly skeptical. Like right now, I have a huge amount of respect for what the Athena team's done. I don't think it's honest to say that, open interest is like infinitely scalable, especially in a market like this. So when you say like, Athena could become like $100 billion, $200 billion market cap stablecoin, I think it's quite hard to see that in the short run. Like you would have to diversify they have to diversify their yield sources. It's not going to be like 18%, 20% APY. Maybe it's a great 4% APY product because it's so different from T-bill exposure. So it's still attractive to funds, but it doesn't mean it's like is as attractive to people when they first started. On the other hand, for another type of asset class I think people tend to package as stablecoin is private credit and the likes, any sort of higher risk credit. So when you talk about like credit or fixed income, like Treasury bill is considered so-called risk-free bond, and then you have like higher and higher risk fixed income or credits, because T-bill is a loan to the government. So you have loans to like various other things, other places. You can loan to Tesla and Visa and like large corporations. They issue commercial paper. So like in many sense, that's relatively safe. There's like junior, senior tranches, but let's just assume that's like somewhat safe. And then you go up the risk curve. You're starting to issue private credit, or like you're lending out to like smaller companies in emerging markets, like Goldfinch. A lot of their loans, I think, had issues. They weren't able to recoup that.
Yeah.
And then you lend it to like credit cards or stuff like that. So you still see some stablecoins that are using this type of backing and they call themselves stablecoin. I think it's fine to structure the product that way, but it would be it's a little misleading to say that those are the same as dollars and to kind of lead undiscerning consumers on as if like, oh, your 20% APY stablecoin is the same as like a 2% APY stablecoin, because they're definitely not the same thing.
Yep.
Understood. And what do you think? I think that's just definitely like the bigger picture of stablecoin after this step, which is actually quite hard to get to, because like the bridge between like the DeFi and the bigger yield and this way is actually quite hard to get to, especially with that many stablecoin protocols. Like, what do you think is required to grow a stablecoin that is great, and like maybe some strategies that you think works or don't work, what other people did, etc.
Yeah, I think in the crypto space, Stuti from Kraken Ventures once gave a talk like when Athena Usual were very strong, and she kind of highlighted a waterfall plan for how to get stablecoin adoption, and the TLDR is like get somebody reputable to shill you. So Athena or get somebody like Athena, like getting exchanges, getting Arthur Hayes, getting like a lot of TVL. That was probably very useful. Usual did a similar playbook where they got a lot of TVL. I don't think any of that is like, I think her proposed theory is accurate for DeFi protocols, but in order for stablecoin to succeed, I'm quite bullish on the ones that are doing active real world BD. Like whether it's Agora, I know they've been doing good work. Sphere on the payment side, maybe like Man Protocol if they one day ever launch on Solana. Those are the ones that spend majority of their time talking to non-crypto people. And I think that's where the real volume is at, because crypto is like, in the end, if you only talk to other crypto people, it's a PvP game. But when you can tap into non-crypto people, so that's something I really wish Perena could get to as well. Right now, we're squarely focused on just DeFi target audience, aka like kind of people like the three of us. But hopefully, in a short next couple of months, we can start building things that are more suitable for like a normal DeFi or just a normal audience with no DeFi experience.
What do you think about PayPal stablecoin?
Poor execution.
I mean, they were doing incentive in Solana,
I want to say
right?
good farm. I was saying good farm, but like I enjoyed it. Like, I mean,
it was a good farm, but they didn't follow up with it. So like I live in the US, so I'm a PayPal Venmo user. I don't think ever once they blasted notifications to users to say, hey, you can buy a PyUSD and you can save. Like never.
Compliance is going to be on their ass for that.
They never said anything like that. They never pushed it within the PayPal app or on socials, as far as I can remember, like to the mainstream audience. You have to click through many different steps, and then you find like the little button that says buy PyUSD. I think where they also missed out on is like, it's a pretty good value prop, because off-ramping, like I know people who get paid in other stablecoins and they off-ramp via PyUSD because it's faster and it's cheaper.
They actually own the own distribution.
They own the product is not bad, but they just don't advertise it. So
Yeah, I'm actually like the reason why I brought PayPal stablecoin is like because I think it fits your profile because like it's like if they were to have your product, it's actually perfect instead of incentivizing some small pools that I come in and enjoy. Like if they do something like that where people that get paid in PYUSD or they use PYUSD to let's say buy things and then it just goes through the router. I mean it's perfect. It's like
Yep.
natural volume, etc. etc. But
Mm-hmm.
yeah.
Yeah. So we
I
have
was
people that use Perena for off-ramping their salary via PyUSD.
That's good. No, you explain a lot in terms of like what you think can grow a stablecoin protocol. I wanted to ask your thoughts on this. Is quite loaded, but bear with me with it. But like, I think one of the interesting thing that you're doing is because you're like on the infrastructure side. I have a thesis that like basically stablecoin was sexy when it was somewhat gray, right? That's what like why USDT and USDC, like can won the market share because they were willing to take that
Yeah.
like regulatory risk. Now I think it's becoming so like everybody can just start it, right? And I have a bit of a concern that like if you're simply an issuer, you will be facing like Fidelity that can probably eat zero fee for 50 years and you
Yeah.
cannot do like anything about it, right? So I'm kind of wondering like as a stablecoin founder, like where's your head at around this, I guess, like in terms of like the business models, mode, blah blah, like how do you see things evolve for stablecoin?
That's why I don't want to be an issuer. When I looked at like I knew I wanted to start something, I saw a lot of opportunities and the first thing I like kind of crossed off the list was I did not want to spend money to get MTL or licenses. I didn't want to compete head on with other established financial institutions. I think there's a ton of opportunities. Like some of the stablecoin, and I invest pretty actively in the stablecoin space. Some of the projects that I think have grown really quickly since the last couple of years since I invested are the ones that target a really specific niche market. Like
Mm.
ones that the VCs don't want to look because they're like, oh, TEM is too small. Oh, this is like too small of a local market, whatever. But those are the ones that succeed because they're the ones where their local regulators need somebody to talk to and they're number one. Or the local like bank or trade association has specific needs, or like industry specific payment slash stablecoin use cases are really good,
Mhm.
because there's no competition and you can just dive deeper and build for that use case. For stablecoin founders, I think one of the things I also think about for us, and I certainly think about for other issuers and founders, is don't overcomplicate or over engineer something. So a concrete example, and not to throw shade on anybody, I really like M0's writings and like I love their design, but the end result for like a business, a non-crypto business, for using M versus using Agora is kind of the same. Like they don't
Mm.
really care about the on-chain governance. They don't really care about, oh, do I KYB versus not KYB. For them, the end result is like I have two things. They look about the same, or they're not. But for like an unsophisticated business, they look about the same. They perform the same things. One is easier for me to understand. One is harder for me to understand. So maybe I pick the easier one.
Mm.
So that I think is a pretty common fallacy for DeFi founders, and I've certainly like experienced that and kind of realized, oh wait, maybe I got nerd type when I didn't need to be.
I mean, DeFi guys definitely like they feel like the more complicated the things are better, basically in general. They
Yeah,
feel like
yeah.
big
Curveball, bro,
brain.
curveball.
Not correct. Yeah.
Oh my god. Yeah.
Okay. What do you think about points?
At first, I think I learned a lot starting Perena. At first, I was like, I hate points. I don't want to do points. I'm so tired of points. And then I decided to do points, and I think I did points too early. But I
Mm.
Yes.
also realized points is so useful. Um, I would recommend every founder to run points, but run it carefully. Like I think
Yeah.
it's actually really good because it gives you it trains your team and yourself to tune the way you think about incentives. Like I frankly, as a first time founder, when I started this, I was like, oh yeah, incentives sound about right. It's probably okay. And then I realized, oh, there's actually a ton more. Like as a DeFi user, I do farm, but I'm not like down to the T calculating my gas costs and per point.
Yeah.
But we have users like that, and a lot of them. So like the trader mindset users, they're those. But the majority of the users are kind of like, I guess, kind of like myself, where I would go farm, and if the farming's ended, I like the product, I'll keep using it, and it'll just be a part of my like DeFi repertoire. So that's a type of user that I would try to onboard, and just keep them around. And the longer you keep them, and the longer you can prove that your product is still shipping new things. The examples I could think of are like Camino and MarginFi gained a ton of users because prior to them running points, Solana users didn't even know about Borrowland. Like, I was talking to my friends 2 years ago or something. We're like, oh, what is looping? Like, how do I loop this thing? Or how do I, like, what am I doing on Camino? So through that, we onboarded a ton of users who will now forever be on DeFi Borrowland. And yeah.
Huh.
So actually, do you mind sharing a little bit more detail on what worked and you think what didn't, and how you're designing it to improve it, kind of thing?
What for us? What worked and what didn't?
Yes.
Yep.
Yeah. I mean, it's all public information. So the first season we ran, and before I go into that, by the way,
I am a
think
point holder, by the way.
I really try to. I got the team to embody the ship and prod mindset, which I think is like great for many use cases, but DeFi users are not the prime audience for ship and prod. DeFi users get so mad, man. Normal users are like, oh, you ship new things, I'm beta testing. DeFi users are so, I think, used to seeing like fairly complicated systems work with lots of internal testing that they obviously don't see. For us, we put out our first points program within 1 week of conception. So we're like, oh, let's do points. Like 1 day or 2 days, we decided point mechanisms, and the front end dev was already like building the, hooking it up to our backend database and all that. Logic wise or mechanism wise, I think it was suboptimal, but I wouldn't say it was bad. Like first time we ran it, we incentivized a lot on swapping versus holding, and with that drove a ton of volume. So like users were swapping very aggressively. Second season, we're like, okay, let's not do that. Let's incentivize more holding, but also because that's when it coincided with a ton of the with a lot of the protocol integrations. So then holding makes more sense. I'd say if I were to do it again, I would probably think more on what the focus of each season would be and how do you tune emissions to those focuses.
Yep.
But one small alpha I will drop is like we very much track how long or when users come into the protocol, and that will have an effect down the road. I think like time weighted contribution is something a lot of projects don't focus on as much, but we definitely do. And I think Camino did it pretty well as well. I think they had like a boost for older users.
Since we're a bit nerd sniping on this, Lambro, you know, I mean, like you're like a massive DeFi user. Like, do you think time weighted is good? Like, I think it's good, but like I might be wrong because like otherwise you would have Justin Sun just come in at the last day, and then he's just gonna take the whole pie. But yeah.
Oh, I think there's a few ways to think about, right? Yeah, because as a points program, there is certain things to balance out. The first thing is you want to use your points to incentivize users to do the thing you want. Second bit is you want to distribute your token to the right user, or do you want to distribute the user to get the right numbers? Like let's say from fundraising point of view, from token launch point of view, it doesn't really matter if Justin Sun actually just comes in and pump your TV about 100 mil, right? It's actually bullish for a token.
Yeah.
The right users might not buy your token, or you have more right users, but if you give them all the tokens because they will sell, even though they're the right users, does not matter. So that's like a big dilemma, and I respect that you're so openly talking about it. And I to me, it's a game, right? It's a PvP game, and did I bet on the right founder to do the right thing by me, or did I bet the founder that is going to just want to pump the numbers so they can launch a better token, etc., etc. It's just a PvP game, to be honest, like in my opinion, and I don't think there's a right or wrong way. Like if like usual, right? They did a lot of things wrong and a lot of things right, but they got certain right result at a certain point, which was a win-win. And nothing can't be solved by a few green candles, to be very honest with you. So like,
and
that's
is
a fact.
especially true for today. Okay, got
And
it.
so I mean, like the thing is that the only thing I think doesn't make sense is over marketed things that you already know is not right. Like, for example, you're telling people to don't do certain things, but you bullshit about it and those kinds of things. But yeah, that's just my 2 cents, and I really respect Anna for being so open about the whole thing and talking out the thing. And that's something that people lack, actually, like, because a lot of protocol founders don't actually have that much time to use every single protocol. Like for me, I would say I use 90% of the protocols out there. I've farmed most of the point system. I've actually understand how the whole thing works. But most founder, if they do that, they're probably not a very good founder because they're just
Exactly.
so it's
Too
good
many
that
side
you guys
quests.
are learning.
Yeah.
And you guys are one of the few projects that actually listen and just openly tell people that basically tell people that I fucked up, bro, kind of thing, right?
Yeah,
And that's actually bullish in my opinion.
Made a mistake.
But yeah,
Got it,
hopefully, yeah. Okay, like I want to be mindful of time, so I do want to move on to the next topic that I really want to cover. Why do you think there's so many stable coins that's coming out?
Oh, that's a loaded question. There's an ego level, then there's the business level. And I
Okay.
certainly have experienced that myself on the ego front. It's like, ooh, everybody can use USD Star. This would be amazing. And every other, like, just imagine the CEO of every major institution that's thinking about it right now. Bank of America is like, oh, what if everybody uses Bank of America note? And then JP Morgan's like, what if everybody uses JPM note? So like ad infinitum to
Yep.
like everybody who thought about this. Definitely that level. And then the other one is just, I think every board meeting for fintech and financial institutions, they were like, shit, Tether is the most highest,
Profitable.
one of the highest
It's crazy.
revenue
Freaking
per
crazy.
account. Like,
Yeah.
what the fuck is this business? So I think all those aside, for businesses that have a lot of semi-closed loop or almost entirely closed loop payment flows. What I mean by closed loop is like you start from one, you go through like multiple other stops, and then you like end at that one. So this is particularly true for, let's say, Stripe, Shopify, like PayPal or Visa, like those ones. It makes a lot of sense for them to have their own stablecoin. It's regulatorily easier to comply if you need to freeze, because you do get a lot of anti-money laundering, like AML complaints, requests, etc. So you don't want to be reliant on a third-party issuer. That is like practically one of the reasons. You want to earn float. That is probably a major reason. You want to try to disrupt and infiltrate your potential competitor or upstream, downstream flow, so you can capture more value and you can see a lot of data. Like current fintechs, why would they really, really want to launch their own stablecoin and maybe lose money in doing so? Which I think is a good strategy. Like if I see an up and coming, like tier 2 fintech, they launch their own stablecoin and they just incentivize the shit out of it in a way that's not, it's a money losing business. But what you get in return, if you can get your partners to adopt it, is you have so much information into their payment flow, and you can actually capture a lot of value on that front. It's like Google selling you free search, but then they give you ads, or they like have so much data on you. So yeah, those are some good reasons why they want to launch.
100%. I always often think like stablecoin should be the only layer one in some sense. Like it's actually the ultimate form of all DeFi. Yeah. Like there shouldn't be a DeFi chain, but it should be a stablecoin chain. And like if you think about it, right, like there's so many yield strategy protocol that worth so little, even a better yield or higher TVL. But like if you put a stablecoin on top, oh shit, Athena, the next Athena. right. Obviously, the execution of Athena was a lot better. Like I was so surprised at Athena's execution. I was pleasantly happy. But anyways, let's not shill your competitor today, because Oh shit! We're at time here. Okay,
I
maybe I need.
I want to ask you just one very quick question. Like, what do you think is the most underlooked edge of Tether? Like that people don't know, like obviously people know they're a great business, blah blah. They're the first mover, but like, what do you think is often overlooked that makes them so great?
Being non-compliant, or sorry, precisely not being in compliance. Not being in compliance and non-compliant are different things.
Yes, yes.
Why? Because it gives them a lot of flexibility in their collateral management. It's opacity, which means trust and lack of avoids bank run. Ability to underwrite and extend credit. So I think Matt Levine said Tether is a financial institution and Circle is a fintech. Yeah, it's night and day difference. One more thing, maybe people already know this, but Tether's got like essentially its own DePIN network around the world with no token incentive, no token emissions. It never had to share yield, and entire world, like emerging market shops, support Tether.
Yeah,
got it.
OTC shops and shit.
OTC
Okay.
shops.
Do you have any questions for us?
Thoughts on stablecoin chain, Codex?
It should be you, Lambro, because I'm gonna be biased.
I am actually not fully educated on this topic. I haven't looked at it properly yet, so I'm not going to pretend to expert it. I'll be real.
Marco, you guys invested?
Yeah.
All right, show me, bro. Show me your bags.
No, I'm not gonna shill it, but like I think the most interesting thing is that like there's like a debate of basically like do stablecoin need their own chain, and I think it's been like quite hot because Codex is a stablecoin focused chain. It's an L2 on it's built on OP stack, and then the competitor, just to be fair to our readers, is a Plasma, which is like Tethers, right? It's also like a stablecoin focused chain. So now because those two raised a lot of money and they're out in public, a lot of people are just debating if it's needed or not, if it's just a token game, or is the argument that they need customizability, like up to like very minute level so that they can optimize. In the case of like Codex, it's going to be for like B2B stablecoin payment. So if you want to send, I guess like if you're a coal mining company in Thailand trying to sell stuff to like Africa, right? Like in the current process, like you would jump through like multiple hoops and like fees and charges and T+3, like 5 days of like settlement and so on. But they're like basically trying, like if you use our platform, it's instant, right? So they will take care of like everything on the back end, the integration with FX swaps and so on. Yep.
Nice.
Yeah.
Not my cup of tea because I can't make money from it as a retail for now at least. I'm gonna be real, right?
Yeah. There's no consumer angle yet, right? Or like I don't know if they're gonna do consumer angle.
If you can let me slip a ticket in, maybe I'll look into it. Like shit. I mean...
okay. All right.
Sorry. Okay. Yeah. Do you have any more questions? If not, we have this last question that we ask every member that comes on. What do you think is required to make it in crypto?
Ability to tune out. Actually, no. What is required to make it in crypto? Ability to believe in dumb shit. Like,
Fact.
I took the L on so many both trades and trends because I was like, oh yeah, this would never happen in a normal world. Oh yeah, no logical person would like want to use this, and every time it was always an L. Like, yeah, you have to. Like, I remember, what was it? It wasn't Mudang. It was like, yeah, so many times. Most recently, I like saw Trump when the Trump coin just launched. I was like, oh shit, this is like 100% just. It's for sure real, but it's so stupid. Nobody would buy it. And then I went to bed.
Generational mistake.
Yeah, generation. Like, goodbye, generational wealth. But
no, it's good.
Of the DeFi primitives.
Yeah. I was just gonna say, like, if you bought that, you would have been retired now, and you're not working on Perena anymore.
All the TV I would have gone to Perena, okay?
Oh, okay, yeah. Exactly. That's a big brain movie.
Wait. Isn't that what
like
every BTC5 is doing? Sorry.
BTC5.
Don't worry.
No,
That's what all
it's
BTC5 is doing.
He's just making fun of the whole BTC file. Like, I'm sure
Oh
you know.
yeah.
Yeah.
No. I mean, okay, that one's also like something I just can't get around to participating yet. So maybe like 2 years from now, I'll be like, oh no, I was wrong. But yeah, like in the beginning when I looked at convex or curve or maker, I'm like, those things look a little bit like, what is this convex curve war thing? I didn't understand why people would want to use it, but now I think I have a better, like, I'm more open-minded to new sorts of experiments.
So are you farming
Got
Bearer
it.
then, I guess?
Farming who?
Bearer chain. Bearer chain is like
Bearer-
convex
oh.
on convex on convex on convex on convex on convex.
No, I'm not farming Barachain, but I looked at a lot of their points design.
That's good.
I
That's
see.
good. Yeah. I see.
All right.
Well, yeah, like I think we're like out of time. So again, thank you for coming on, Hannah. This has been great. And
Yeah.
until
Thank you guys for
next
having
time, check out all the show notes. The points program is still going on and all of that. So all of the good stuff is down below. Cheers.